pre-announcements are not typically a good thing, but in some way, maybe that means they're already baked into the cake, and typically people, throw everything into the kitchen sink, and therefore the numbers actually look better than they otherwise would.
Typically, you see companies underpromise and overdeliver. They'd much rather do that. I think what we have to keep in mind, though, is that the market has almost ignored earnings for the last couple years. So last year, we had earnings growth of 23 to 26%. Market ended the year down. This year, we were expecting earnings growth flat for the first quarter, maybe even slightly negative, and we were up 19% by April. So not to say that it doesn't matter.
Right.
But the market is watching things like monetary policy, watching trade, and watching all those macro headlines much more than earnings.
Historically, and I don't know if you've looked at this statistic, when people have pre-announced, on the flip side, has the market been better three months later? I mean, sort of after a quarter where people do these pre-announcements, then out-earn what they said they were going to do, does the market move higher? Or you're saying that they're not even looking at earnings anymore?
I think history, long-term history, is not really what we've experienced for the last couple years again. Okay. And in the last quarters, what you've seen is the market has punished negative news more than it's rewarded positive news. So some of that positive surprise from earnings it ends up being just a lack of a negative, right, and the market doesn't really take off either way.
Hey, Lindsey, if she's right, let's talk macro. Let's talk macro trends for a moment. What do you think we're going to see on Friday, and therefore how's it going to play out in the market?
Well, I do think the market's going to be watching this employment report. We're looking for non-farm payrolls to come in around 150, 160, so only slightly below market expectations. Now, relative to last month's very disappointing report, this would be a vast improvement. But on a nominal basis, that's hardly robust. So this sort of unevenness in the data is going to complicate the picture for the Fed going forward. It's very clear that the economy is not falling off a cliff, nor is the labor market. But there's evidence of mounting weakness underneath the surface. So the question is, when is the appropriate time for the Fed to issue that first rate cut? The market is pricing in July with near 100% certainty this continued sort of moderate level of strength in the data, however, is not enough to convince the Fed. So I do think if we see a 150, 160 print, the market's going to be pretty uneasy about that because it's not enough to convince the Fed to take that plunge.
We want the number to be terrible? You want to tank the number so the Fed moves? Is that what you're saying?
I don't think we want a terrible number, because a terrible number, I do think the market would also sell off because it signals that the Fed missed their opportunity to give sort of that insurance rate cut, as we saw back in the 90s. So the market is looking for more of a tepid number, enough to signal that the economy is still on moderate footing, the labor market is still creating jobs, but at a more tepid pace, but it's enough to convince the Fed. So it's a very fine line that we're looking for in terms of the economic data.
What do you think is going to happen here?
I think Lindsey's right. I think the market, the best thing that could happen for the market is kind of a benign response on Friday. And you have to remember, everybody that was positive coming into this year, it was based on a strong labor market. The good news is that even if we do disappoint slightly on Friday, we're starting from such a high spot, right, that it's not as if we were teetering on the brink of disaster. So if we have a little bit of negative news, we have some room for that. But what the market is watching is, what does that mean the Fed is going to do?
Final question. How much does the trade negotiations with China matter now? Meaning, before they were weighing on the Fed and potentially weighing on the market, now a little bit less. Does that make it less likely that the Fed actually moves in July?
I don't think that the Fed is going to be watching trade as closely to decide what to do in July. They're watching what they should be watching, like employment, inflation, and those types of numbers.